This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Banking on the banks, JP Morgan and Wells Fargo, two of the nation's biggest lenders, out with earnings. What their numbers say about next week's bank results. The China challenge, the obstacles American companies face as they do business in one of the world's most important markets. And bright ideas, how one startup is helping others by bringing investors together. We have all that and more coming up on Nightly Business Report for Friday, April 12th. Good evening, everyone. Thanks for joining us. Tyler is off tonight. Our top story tonight, record earnings from two of the nation's biggest banks, but stocks on Wall Street ended their winning streak. JP Morgan and Wells Fargo reported big profits, but investors were not impressed, focusing instead on a decline in their mortgage business. The worry is that weak loan demand could jeopardize the U.S. recovery. Looking at those quarterly results now, JP Morgan's earnings jumped more than 30% to $1.59 a share, 20 cents more than analyst estimates. That's thanks to gains in investment banking, not loan growth. Revenues fell 3% to $25.8 billion. That was slightly below expectations. And a similar story at Wells Fargo, where profits soared 22%, 92 cents a share, beating estimates by 4 cents a share. Revenues, however, fell 1.6%, below expectations. Joining us now with more analysis on all of this, Fred Cannon. He's director of the bank research firm Keefe, Bruyette and Woods. Fred, what is the most important takeaway from these reports today from JP Morgan and Wells Fargo?
The most important takeaway is that at these big banks, revenue growth is very hard to find. It seems like every time something kind of goes right, something else is going wrong. As you said, the trading income was strong, mortgage income under pressure. So to get these record earnings, what they have to do is they have to have great credit, that is, everybody's paying back their loans, and also keep expenses under control. So they continue to post good numbers.
Everybody was focused on what was going on the mortgage side of their business. Mortgage loans and applications were down. And yet we know that home prices and home sales are up. So it seems like there's a little bit of disconnect. You would have expected more loan growth.
One would expect, but remember, it's all about refinances today. And what happened last year was not only did we have record refinances because of very low rates, interest rates, and the federal government's programs to help people refi, but we also had very few mortgage banks lending last year, and so the spreads in the business were huge. Well, what's happened now is there's a bit fewer loans, but really what's happening is the competition for them is so tough by the banks now because of the profits. Those spreads are coming in, and that's really what's pressuring the earnings right now.
All right, so today was all about JP Morgan and Wells Fargo. On Monday, it is Citigroup, and then on Wednesday, Bank of America. Are we going to be hearing the same story, the same themes from those banks?
You bet. These two really set the themes because they're the two bellwether stocks. And so next week we're going to hear good trading, pretty good investment banking, but boy, that domestic revenue's under pressure, spreads are down, mortgage banking's down.
Looking at the recommendations, the bank stocks that you are recommending right now, you've got Citi and Wells Fargo. Let's start with Citi. You know, investors have had to be patient for a really long time. How much longer do they have to wait if you buy the stock at $44 a share?
Well, I think that you still have to be patient. This is a long-term turnaround. It's probably the biggest restructuring story in U.S. financial history, perhaps, and maybe in the whole U.S. economy. But we do think they're going to continue to post good progress on that restructuring, number one. Number two, this mortgage banking really isn't a big revenue item for Citi. They're not doing that much. But the backdrop you mentioned is increasing home prices really helps clean up some of the legacy problems there.
Tell us your thinking with Wells Fargo. That's the other one you're recommending at $37. It was down today, but long term, you think it's a good buy?
Right. Long term, I mean, everybody's worried about these short-term mortgage banking numbers, as you talked about. That was like 19 out of the 20 questions on the Wells Fargo call was about it. But if you think about it in the bigger picture, rising home prices, and we're seeing a strong market this spring, are a very good thing for banks. It means the assets are better, it means credit quality is better, and at the end of the day, higher home prices means people are going to be borrowing more money.
We have a few seconds left. Bank stocks have been rallying actually since December. Is this the end of that rally, or is there still some upside overall?
I think that home prices is a very good backdrop for it. But remember, the other problem is the 10-year yield curve, the 10-year bond yield has come down. That's a little bit tough for the banks in the short term. But over the next year, we think there'll still be some background because of those home prices.
Fred, any disclosures? Do you own any of these stocks?
I don't. Right.
Okay. All right. We'll leave it there. Have a great weekend. Thanks so much, Fred. Fred
Thanks,
Cannon,
Susie. Great to be on.
Director of Research at Keefe, Bruyette & Woods. Well, besides those disappointing bank reports, discouraging news about the consumer also weighed on the markets today. Retail sales fell in March. That was a sign of sluggish consumer spending. And an index of consumer confidence from the University of Michigan showed a sharp drop in April. By the closing bell, here's how the week ended on Wall Street. The Dow down as much as 74 points at the lows of the day, ended just a fraction of a point lower. The Nasdaq off 5 and the S&P down 4 points. Still, those averages were up for the week by as much as 2%. Meanwhile, in the commodity markets, gold prices plunged 4% to $1,500 an ounce, down $63 to the lowest level since July 2011. Well, despite those discouraging reports on retail spending, Terry Lundgren, the CEO of Macy's, says at his stores, customers are still opening their wallets, even though the payroll tax increase has forced a lot of other consumers to pull back.
Our customer seems to be resilient and seems to be continuing to buy when the product is right, when the value is there, and when it makes sense on a price-value relationship. So we continue to be confident, at least in our case, that the consumer is still in a buying mode.
Our Courtney Reagan also keeps close tabs on the buying habits of consumers. She's at the state Supreme Courthouse in New York City. She's been following the trial pitting Macy's against JCPenney over the rights to sell Martha Stewart branded goods. Courtney, we're going to get to that trial in a moment. But first, I just want to get your take on what Terry Lundgren said. Do you think that consumers are in that buying mode? I know you're always checking in at the stores. What do you think?
That is true, Susie. I think that it depends on the consumer and it depends on the store. It's not a very easy answer. We heard earnings from Family Dollar earlier this week. There is some concern about that consumer, the lower income consumer. Of course, if you are one of the folks that is looking for a job and has been unable to find one, you're likely to be in the camp that is spending a little less. We got those retail sales numbers today from the government, disappointing. And if you look into the details, it's the discretionary spending that seems to be taking bigger hits. Department store sales down 1.1% for the month. General merchandise sales down 1.2% for the month, much bigger than the fractions of a percentage that the entire number was down. I think consumers have gotten smarter. They spend when they feel confident, and those consumer confidence numbers also hitting 9-month lows.
Absolutely. Well, you know, a lot of what's going on at JCPenney is going to depend on consumers spending money in that store, and there's so many issues there. Let's first start with this court battle. A lot of news coming out of the courthouse today. What's the latest?
That's true, Susie. So what happened today is that the judge ruled that JCPenney will be allowed, at least temporarily, to sell the goods that Martha Stewart designed, but that do not have her name. They're currently labeled JCP Everyday. Many of these products are in the categories that Macy's is arguing it has the exclusive right to sell. A Citi analyst values this inventory at about $100 million. So the judge is going to allow JCPenney to sell the JCP Everyday merchandise at this point. The trial itself potentially weeks from being over, and when the final decision comes down, all of that could change very quickly.
And you're going to be back at the courthouse next week, and we'll be counting on your reports from there. Thank you so much, Courtney. Courtney Reagan reporting on JCPenney. Well, our Market Monitor guest says today's pullback in the stock market is a good thing. She's Ann Milletti, Senior Portfolio Manager at Wells Fargo Advantage Funds. So, Ann, you're actually looking for a 10% pullback. You said you would welcome it. Why should investors welcome that?
Well, it's hard to know exactly how much of a pullback we will get, if any at all, but I'm hopeful that we will get some. I think the market has gotten a little bit ahead of fundamentals right now, so it seems to be the multiple that's increasing, but not necessarily the earnings. I think we're headed into the announcement season and pre-announcement season actually for Q1. And if we see too many disappointments, I think there is a chance that the market is going to be disappointed and sell off.
You know, the Dow is up something like 13% so far this year. The S&P about the same, 11%. Is this as good as it gets? Investors have been hoping for a summer rally.
Yeah. You know, I think after a 13% run in one quarter of the first quarter of the year, that's a pretty remarkable return, and I don't think one that most investors expected to get right out of the gate. And so I'd like to see a pullback or, you know, even just some stability here because we are bullish longer term and we want more opportunities to invest.
And yet you still see that there are some good values, some good stocks to buy. And let's look at your list. And actually, you have a very controversial one at the very top of your list, Carnival Cruise Lines. We're very interested to know why you're interested in CCL. What is the attraction, given all the problems that they've had?
Good question, Susie. Well, outside of the events that have made the news, the underlying fundamentals for the cruise industry are actually pretty good. There's less capacity in the industry today than there was years ago, and Carnival, their net yields are actually up year over year, and pricing's up. And so although these events could have near-term impacts to the stock, we're looking out over the next 2 to 3 years and think the stock's trading at a big discount because of these events. So we're looking at the events as being an opportunity to get involved.
Fascinating. Let's look at Nuance Communications. This is NUAN on the NASDAQ. Actually, Carl Icahn made news this week. He bought 9% stake in this company earlier this week. Is that a good sign?
Well, he's certainly finding some valuation attraction, much like we did. We've been involved since the beginning of the year in this name. It's a voice recognition software system that's applied. Most consumers know about it from their cell phones, their Dragon technology, or Siri if you have an iPhone, but it actually has business applications that can provide a lot of cost savings. So for example, in the healthcare system, where you're taking paper records and trying to digitalize them, you can take their technology and use voice transcription to turn into digital records for patients.
All right, let's see if we can get in a third one of your recommendations. This is Dick's Sporting Goods, DKS, on the New York Stock Exchange. Why are you recommending this one at $49 a share?
We think Dick's is a share gainer overall in the sporting goods space. They have great retail locations, primarily in the East and Midwest. They're going to be expanding out west. In the markets they've been in, they have been share gainers, as I said earlier, and we believe that's going to continue. And the new store growth on the west will provide growth for a couple of years to come yet.
All right, lots to think about here. Any disclosures, Ann?
I do own the funds in which we are investors in the names that I talked about, but I don't own them individually.
All right, thank you so much. Ann Milletti, Senior Portfolio Manager at Wells Fargo Advantage Funds. Coming up, from Yum to Caterpillar, the challenges American companies face when doing business in one of the most lucrative markets in the world. But first, a look at how the international markets closed today. The Federal Reserve's $85 billion in bond purchases every month has gotten a lot of credit for boosting the stock market and the overall U.S. economy. But now some members of the nation's central bank are debating whether it's time to pull back on all that buying. One of those policymakers is Eric Rosengren. He's the president of the Federal Reserve Bank of Boston, and he says the time is now.
I actually think there's strength in the underlying economy. If you had asked me 6 months ago, would we have the kind of growth that we've been getting with a tax increase, with a sequester, with the problems in Europe, I probably would have expected a slower economy than what we're actually finding. So I think we are going to get a pickup. I'm pretty confident of that. And so I want to taper, but I want to taper and stop our program because we're getting strong growth in the economy and strong improvement in labor markets.
So maybe it was that underlying strength that helped lift some consumer names in the market today, and that's where we begin our market focus. Among the blue chip gainers, Home Depot, Walmart, and Procter & Gamble touched all-time highs. Bed Bath & Beyond was one of the best performing stocks in the S&P today. Home Depot jumped 2% to $73 a share. Walmart gained almost 1% to $78 and change. P&G rose a fraction to $80. And Bed Bath & Beyond up more than 4% to $66.76. The home builders also saw gains. A noted housing analyst, Ivy Zellman, upgraded several stocks, including Beazer, MI Homes, and KB Home, to buy ratings. Zellman said that she likes stocks that are long land, her words, and that California home building is strong now. At the close today, Beazer gained more than 5% to $15.66. MI Homes up more than 2%, and KB Home added 0.5% to $22 and change. Now, today's drop in gold took the shine off some gold mining stocks. Newmont dropped to 4-year lows. It was down nearly 6%. But other miners lost even more. Barrick tumbled more than 8.5%, and Goldcorp off by almost 5%. And Infosys, this is the Bangalore-based outsourcing giant, lost 1/5 of its market cap today on a gloomy earnings and revenue outlook. Infosys says that sales will grow, but warned they will be well below forecasts. The company's U.S. shares plunged more than 20% in heavy volume. There are always challenges for American companies doing business outside the U.S., and when that business is conducted in China, the rewards may be great, but so are the risks for companies and their employees. Eunice Yoon has our story.
This may look like an Apple ad, but it's an expose. An annual TV show on consumer rights in China recently targeted Apple, accusing it of treating customers here as second class compared to others around the world, including Americans. Apple apologized, but the attack by the government-backed media raised concerns that Beijing's attitude towards international companies is about to turn sour.
A foreign company might be an easier target to go after than a local one. I think we've seen that in the past. Maybe we've seen it more recently.
For decades, Beijing courted companies from overseas. China got jobs, everyone else got affordable goods.
But now more global firms are facing what they fear is a new reality, a tougher business climate in an important market. Many worry about cyber espionage, new taxes, and policies that seem to favor Chinese brands, despite longtime frustrations that the playing field here is far from fair.
It's hard to compete with a government-backed entity. We've done pretty well doing that, I would say.
Do you think it's fair?
I don't know if it's fair or not. It's China.
Not all the concerns are related to the government. Yum Brands, a fast food giant behind KFC, was also blasted by the state press, but it failed to detect problems in its poultry supply.
It's not perfect. We have learned a few things this time. It's not about legal requirement, any of that. It's just that if we implement a system, we should have and could have, make it perfect.
President Xi Jinping says China plays fair, but would do more to improve the investor environment. Either way, international companies are looking to stay in the game.
The market matters, and that's why companies are here, and that's why they take the effort to do the tough work that's necessary to grow their businesses here.
Amid a weaker global economy. For Nightly Business Report, I'm Eunice Yoon in Beijing.
American automakers are also doing business in China, and next week we'll have a series of reports from that country, including a look at what Ford is doing to gain a bigger foothold in the world's largest car market. But still on the program tonight, we'll introduce you to a startup that's helping other new ventures to get funding, and fast. But first, here's a look at how commodities, treasuries, and currencies fare today. The clock is ticking to tax day. April 15th is on Monday. President and Mrs. Obama have already sent in their taxes and shared the specifics today. They reported nearly $609,000 in adjusted gross income for 2012. Most of that came from the president's salary and about 40% from book sales. The first couple paid a bit more than $112,000 in taxes. That works out to an effective tax rate of 18.4%. And they donated nearly a quarter of their total income to charity. Last year's income actually was the lowest that the Obamas have made since taking office. And for those of you who haven't yet filed your taxes, you may be surprised to discover that you might actually owe money or owe more money than you expected. So how do you pay back Uncle Sam without breaking the bank? Sharon Epperson reports.
If you think you may have trouble paying your tax bill, don't panic. There are ways to ease the burden. But whatever you do, don't ignore Uncle Sam.
You must file. The penalty for not filing is 10 times more than the penalty for not paying.
Fail to file by the April deadline and face a penalty of 5% of your unpaid tax bill plus interest for each month the return is late, until that penalty hits 25% of what you owe. File on time but fail to pay what you owe and the penalty is only 0.5% of your unpaid tax bill plus interest each month. Need more time to gather paperwork? File for an extension with the IRS by April 15th, and you'll have until October 15th to submit your tax return. Many people need that extra time. More than 11 million taxpayers requested an extension from the IRS last year.
It's an extension to file, not an extension to pay. They have to understand that, okay? Because starting April 16th, if you have a tax liability, interest and penalty begin to accrue.
To minimize the effects of interest and penalties on unpaid balances, start exploring payment options with the IRS.
About 1 in 6 taxpayers who files a return has a balance due on the return. For many people, this is a big burden. They can't pay what they owe, or they can't pay all of what they owe. And for those folks, the payment agreement is very often the answer.
Here's how it works. You set the terms and figure out the largest monthly payment you can make. Once approved, you'll be charged a $105 fee, or $52 if you make direct debit payments from your bank account. If you owe $50,000 or less and have already filed your return, set up the installment plan online at irs.gov. Just remember, don't take too long to pay Uncle Sam. You'll still be charged penalties and interest until the full tax bill is paid. For Nightly Business Report, I'm Sharon Epperson.
And finally, this week's Bright Idea is about the startup that's helping other startups when it comes to raising money. Retailers have a tougher time getting funds compared to, say, tech firms, but a new company in San Francisco is helping to change that through a process called crowdfunding. It brings together groups of angel investors, and as Bertha Coombs explains, for the startups that benefit, it's like a little bit of heaven.
Rory Aiken and Ryan Caldbeck may not look like matchmakers, but their startup firm Circle Up is in the business of bringing together entrepreneurs and investors through crowdfunding.
Crowdfunding is the process of connecting multiple people and allowing them to invest in a project or a company.
Crowdfunding is often associated with organizations like Kickstarter that solicit donations using the internet. Aiken and Caldbeck, with backgrounds in private equity, are using the model to group angel investors hoping to make a profit. The angels buy in through a broker who pays Circle Up a commission, and they get in on the ground floor of small businesses like Little Duck Organics, a healthy snack food maker in need of cash to grow.
I racked up probably about $200,000 in debt.
2 years into his business, Zach Normandin had tapped out his credit cards and the generosity of friends and family. He raised $400,000 from one group of outside investors and went from selling in 600 stores to 4,000. To get to the next level, Little Duck was going to need a lot more cash. Investors told him about Circle Up, and it wasn't long before he got funding.
We got off the phone and Ryan called up after and he's like, we just had $60,000 like committed just on that phone call.
Wondering what we have in stock.
In just 8 weeks, Aiken and Caldbeck helped Little Duck raise a little more than $1 million. They've helped more than a dozen firms raise similar amounts, all consumer packaged goods or CPG firms poised for growth.
Angels and venture capitalists tend to focus on technology, and consumers a little bit underrepresented.
Traditionally, their only option to go raise money has been to fly around to various angel groups around the country. We, by putting it through an online marketplace, make that more efficient.
It was the goal of the bipartisan Jumpstart Our Business Startups, or JOBS Act, signed by President Obama a year ago to help more small businesses raise capital from investors. While the law eases some private placement rules, the hope was the SEC would also ease standards that limit investment to those with at least $200,000 in annual income or a net worth of more than $1 million, not including their home. The SEC has yet to act, but critics worry looser rules will expose investors and maybe companies to fraud. Aiken and Caldbeck feel they're laying the groundwork on a model that works for both sides. What makes it work for entrepreneurs like Zach Normandin is that beyond the cash, he's getting connected to investors he feels believe in his business.
They're vetting through the investors that are coming to the table so that we're not getting like people that wouldn't be a good fit for our company.
For Nightly Business Report, I'm Bertha Coombs.
And that's it for us, Nightly Business Report tonight. I'm Susie Garib. Thanks for watching. Have a great weekend, everyone, and we hope to see all of you right back here on Monday.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. Two of the nation's largest banks reported record profits last quarter. JP Morgan and Wells Fargo both made billions, but revenues were lighter than forecast, and investors focused instead on declines in their mortgage lending units, sending shares of both banks lower. That, along with a drop in retail sales in March and a decline in consumer confidence this month, weighed on the markets. The Dow, down as much as 74 points, ended just a fraction of a point lower. The Nasdaq off by 5, the S&P down 4 points. And President and Mrs. Obama reported nearly $609,000 in adjusted gross income in 2012, most of that from the president's salary and about 40% from book sales. Be sure to tune in to Nightly Business Report right here on your public television station.